I mean, the truth of it is, that is what's happening. Biggest money in the world doubling down on gold, not on cryptocurrency, not on money markets, and not on the Magnificent Seven. At the same time, that's exactly where the people in this country are, thinking that rates could never go higher, things can never get worse, we can never see a bank or insurance company failure until we do.
When the stock market turns, especially the NASDAQ, and I think they will turn, and also cryptos, we could see people ask themselves, where could we go? And they're going to look at gold and silver.
You're watching Silver News Daily. Subscribe for more.
Did you know that the global financial system could be on the verge of collapse? Banks and insurance companies are buckling under the weight of rising interest rates and toxic assets. And amidst all this chaos, silver might be the one asset that skyrockets. Sounds impossible? Well, stay with me, because in the next few minutes, we're diving into why experts believe silver could hit $30 or even higher as the world braces for a potential financial meltdown. Trust me, you don't want to miss this.
With assets that have, I guess you could say, become toxic, assets that were always considered safe and reliable are no longer such as interest rates are rising again. And the insurance companies and the banks had bet that that wouldn't happen again, but yet it is happening again. The insurance companies are loaded with treasuries. That's how they in their mind, are able to guarantee a good portion of their obligations. It's not the only thing they're invested in, but a large portion of what they are invested in would be treasuries, would be things that could certainly have a similar effect in terms of problems in a rising interest rate environment that the banks have. And when we talk about what's happening in California, you know, my heart goes out to all the folks there, and it's hit close to home because one of our own, Megan, my assistant, their family lost their home, completely, totally gone in Palisades. And listening to someone who's actually going through it is heart-wrenching. But this is no small deal. This is, when you talk inflation-adjusted dollars, this is 60% more than the most expensive wildfire in history, at least as of right now. The insurance companies are on the hook for well over $20 billion in damages. And this is exactly the kind of event, the unforeseen event, that can very quickly change the narrative as it pertains to the health of these insurance companies and the health of the reinsurance companies who are backing them up. We're already seeing massive strain on the stock values and the book values of these insurance companies just overnight. Many of the insurance companies saw this coming and bailed. State Farm, I think it was 1,600 policies they did not renew as of July.
The cracks in the global financial system are no longer whispers. They're becoming deafening alarms. Banks and insurance companies, two of the financial sector's pillars, are showing signs of strain that could destabilize the entire system. Let's start with the banks. You see, during the years of near-zero interest rates, banks loaded up on long-term bonds, thinking they were safe. But now, with interest rates climbing rapidly, those bonds have turned toxic. Their value has plummeted, leaving banks with massive unrealized losses. This isn't just speculation. It's already playing out. Remember the string of bank failures we saw in 2024, from Silicon Valley Bank to regional collapses. Those were just tremors of what could be a much larger quake. Now let's shift to the insurance companies, which many consider to be too safe to fail. Unfortunately, they've been making the same mistakes. Insurance companies rely heavily on treasuries and other supposedly safe investments to back their obligations. But as interest rates rise, the value of those assets falls. And it gets worse. Some insurers are on the hook for billions in claims, particularly after catastrophic events like the record-breaking wildfires in California. For context, those fires caused over $20 billion in damages, leaving insurers scrambling to cover the losses. If you think this can't escalate further, consider this. Some insurers have stopped renewing policies in high-risk areas altogether, while others have leaned on government-backed reinsurance programs that are woefully underfunded. The domino effect is clear. If one insurer fails, The strain could cascade through reinsurance firms and even spill over into the broader financial system. And let's not forget, both banks and insurers are highly interconnected. Toxic assets on their balance sheets, combined with economic uncertainty, are like a ticking time bomb. The worst part, most of the public remains completely unaware of how fragile this system really is. So here's the question. If banks and insurers crumble, what happens next? Historically, investors have turned to safe haven assets like silver and gold in times of crisis. But silver's dual role as an industrial and investment metal could make it the real winner this time. More on that in a moment.
California because they saw this coming. This is a massive strain that could very, very quickly become something much bigger, as the amount of money that they're going to have to come up with is extraordinary. And this could change not only their books, but the reinsurance books and the banks that they all do business with. This is the kind of event that strains the system. And then they have something, I forgot the name of it. Let me see what the name of it. I think it's called Real. What is the name of it? Give me a second. There is a program that they have in California, especially in this area, that is backed by the government. And I don't know the exact name of it. The point of it is, what I'm really trying to get across is, and something like California Real or something along those lines, the commissioner of this program a year ago went in front of the legislature and said that this community pooled insurance program for those folks in high-risk areas like Palisades who couldn't get insurance because of fire risk is woefully under capitalized and has great exposure to risk. This is exactly what she's talking about. So not only are the private insurance companies in big trouble, now you have the government-sponsored programs that are in trouble in a state that is massively underwater. Where does the money come from? And this is a growing problem. God forbid there's another problem that pops up out of nowhere, and then things start to become exponentially more difficult. You have any thoughts on it, Mario?
Well, I mean, I haven't looked that carefully into the insurance situation, but one thing I would say that is more of a bigger picture view is that a lot of people in the financial sector, economists, mainstream economists, they seem to think that the bond market is going to continue to perform like it had since 1981. They don't see the...
Now that we've outlined the fragility of banks and insurers, let's focus on why silver might be the escape route for investors when the system starts to crumble. Silver has long been considered a safe haven during economic chaos, right alongside gold. But here's what makes silver particularly unique. It's not just a hedge against inflation or financial instability. It's also a critical industrial metal. Think about this for a moment. Silver is essential in everything from solar panels to electric vehicles, and with the world rapidly transitioning to green energy, demand for silver is only climbing. And here's where it gets interesting. While gold often steals the spotlight, silver historically outperforms gold during financial crises. For example, in the aftermath of the 2008 crash, silver prices jumped by over 400% between 2008 and 2011. Why? Because when fear sets in, investors rush to tangible assets, and silver offers that same security as gold, but at a fraction of the price. Right now, silver is trading just above $30, but experts believe its safe haven appeal could push it beyond $38, possibly even higher. It's not just speculation either. Big money players like institutional investors and central banks are quietly increasing their silver reserves. And let's not forget retail investors. When fear trickles down to the everyday person, demand for physical silver, like coins and bars, tends to surge, driving premiums higher and availability lower. But silver's story isn't just about fear. It's also about opportunity. Unlike gold, silver's industrial demand is surging thanks to the clean energy revolution. For instance, silver plays a pivotal role in solar cell technology, and with governments worldwide pushing renewable energy initiatives, this demand isn't going anywhere. And here's the kicker. Silver isn't just scarce, it's running at a deficit. For years, mining supply has struggled to meet growing industrial and investment demand. Combine that with the systemic risks in banking and insurance, and silver's appeal as a safe haven asset becomes undeniable. But here's something to think about. If silver does skyrocket in the face of financial instability, how prepared are you to take advantage of this opportunity? Are you holding any silver in your portfolio, or are you leaving your future at the mercy of a crumbling financial system? Let's dive deeper into how history proves that silver shines brightest when the system is at its weakest.
Rising yields that we've seen in the last 2 years as a change a change into a bear market. And I think that's the whole problem for insurance companies, pension funds. They've been used to being able to always refinance at lower rates, and they've had to leverage as well because rates were near zero for so long. So I think it's a big problem. And we were talking last night, Andy and I, about the 1907 earthquake in San Francisco, how that triggered a big financial disaster back in 1907 that eventually led to the creation of the Federal Reserve. So these fires in LA, they could be the trigger. Right now, it's still too early to say, but I think we should keep an eye on.
And the people who are thinking rates will never go higher, this is the biggest ever move higher in yields following the first Fed cut ever. And so it's moving counterintuitively to history. It's moving counterintuitively to the Fed's wishes by lowering the front end of the curve. The back end is going up. We were also talking, Mario and I, about what's happening in the UK regarding yields, and he was saying the bond yields on the 10-year, 30-year, what, 5.6, 5.7?
Yeah, almost, and it's at the highest level since 1998.
Right, and so this is not just the United States. This is happening to our allies across the pond. Higher rates is a consequence of all the money creation, of monetary and fiscal irresponsibility, and there's no way around that, which will just add strain to the already over-leveraged, undercapitalized insurance industry and banking industry. And this is something that I think will become a major focus of anyone running a business or trying to figure out the cost of money. It has to move higher on the back end of the curve, and that is the part of the market that all of the loans and the leases and the mortgages and the credit cards, all of the important things are based off of, not the federal funds rate.
History has a way of repeating itself, especially in the financial world. If you're wondering whether silver can really soar during a crisis, let's take a closer look at the past. In 2008, the global economy was teetering on the edge. Banks were failing, unemployment was soaring, and fear dominated the markets. As the financial system crumbled, investors rushed to safe haven assets, and silver emerged as one of the biggest winners. Between 2008 and 2011, silver prices skyrocketed from under $10 an ounce to nearly $50, an incredible 400% increase. Why did this happen? Because silver isn't just a hedge against inflation. It's a hedge against systemic collapse. When trust in banks and fiat currencies erodes, investors look for something tangible, something with intrinsic value. And silver, with its centuries-long history as a form of money, fits the bill perfectly. But 2008 wasn't the only time silver stole the spotlight. Back in the 1970s, during another period of economic instability, marked by inflation, energy crises, and geopolitical turmoil, silver soared alongside gold. It reached a then-record high of $49.45 in 1980. The key takeaway: when fear grips the markets, silver doesn't just hold its value. It often outpaces other assets. Now, fast forward to today. The conditions we're seeing: rising interest rates, mounting debt, and fragile financial institutions are eerily similar to those past crises. And while history never repeats itself exactly, it often rhymes. Once again, we see big players quietly turning to precious metals as a hedge against uncertainty. Central banks are hoarding gold and institutional investors are accumulating silver at unprecedented levels. Even retail investors are starting to take notice, with some analysts calling for silver to hit $38 or higher in the near future. But here's the question you should be asking. If silver soared during previous crises, why wouldn't it happen again? The signs are all there. Systemic risks, a supply deficit, and growing demand. The question isn't if silver will shine again, but when. And the current global landscape. Let's talk about one major factor driving this potential silver boom: China's economic influence and how it's reshaping the market.
Number two, 7 stocks. The Russell 2000 and the Wilshire 5000, which is a much better picture, snapshot of the United States economy. The majority of those are underwater. 7 stocks holding the whole thing up. That's where the majority of the money is. And then in cryptocurrencies. And the cryptocurrency market, in particular Bitcoin, has been so financialized. Thinking again in terms of a rug pull. One big bank falls, one big bank, like a Bank of America. You keep hearing rumors of it, a bank bail-in. Things get very real, very, very fast, as it would sweep up in one swoop a good portion of all 3 of these markets: the crypto market, the 7 stocks, and just this money market phase where even though they changed gating legislation, they can now impose serious fines, if you will, or costs for making them really uneconomical to leave the money market if people start to do that. It's the same thing as gating, only you can leave, but at a very high price. So I'm not, again, trying to walk the line of conspiracy and reality, but when you talk about how bad this could get very quickly, it's very fragile. And I think that's the one thing people are missing. It's very, very fragile right now. And I think the stage is set for something to happen that would very quickly wake up the entire country, which would very quickly reignite the demand for physical precious metals, like we saw last March and April when the banks failed, Silicon and Signature, where we added 14,000 clients in 45 days. That's 4 years worth of client acquisition. And those banks were illegally bailed out. Remember what happened in Lindsay, Oklahoma in October, the first bank bail-in. Was that a test flare, if you will? Was that a trial balloon for a bigger, more significant bank failure, which would usher in what?
Let's shift our focus to a global powerhouse that's reshaping the silver market: China. When it comes to precious metals, China isn't just a major player, it's a game changer. First, consider China's role as the world's largest industrial consumer of silver. Silver is a critical component in manufacturing everything from electronics to solar panels, and with China leading the charge in renewable energy, its demand for silver is skyrocketing. In fact, the push for green energy, especially solar technologies, has created a surge in silver use with no signs of slowing down. But here's where things get complicated. While China's demand for silver is growing, its economic uncertainty is creating volatility in the market. Trade tensions with the U.S., fluctuating factory output, and challenges in global supply chains are impacting silver prices. For instance, tariff threats and geopolitical instability have historically disrupted silver's momentum, creating short-term price dips that can catch traders off guard. Still, in long term, China's economic strategy heavily favors silver. The country has been stockpiling metals, including gold and silver, as part of its de-dollarization efforts. By reducing its reliance on the U.S. dollar, China is signaling a shift in the global financial system, one that leans more on tangible assets like precious metals. This de-dollarization trend doesn't just boost demand for silver, it also positions it as a cornerstone of economic security. Another factor to consider is China's influence on silver mining. Although China is one of the top silver producers globally, its domestic output isn't enough to meet its industrial and investment demand. This imbalance makes China a major importer of silver, further tightening the already limited global supply. So what does this all mean for you? It's simple. When one of the world's largest economies becomes increasingly dependent on silver, both as an industrial necessity and as a hedge against global uncertainty, the stage is set for significant price movements. And with China's impact on silver's supply and demand dynamics, any market instability could send prices soaring. But China isn't the only factor driving silver's appeal. Let's talk about the bigger picture, geopolitical tensions and weakening U.S. dollar, and how they're creating the perfect storm for silver's rise.
We've had some very large deals recently, really large, but missing is the volume. It's interesting, Dunnigan, because all we continue to hear is strains within the LBMA and the COMEX. Huge deliveries, 46 million ounces delivered of silver off of COMEX in December. Huge deliveries off the LBMA and all of the exchanges around the globe. The central banks doubling down their 12-month moving average the last 2 months of 2024. And at the same time, I would say that the retail demand is eerily quiet. Premiums on gold and silver coins that were parabolic during the pandemic have fallen to levels I've never seen before. Much like a pendulum shifts from one side too high to the other side too low, that's where we are right now. The biggest, most sophisticated, well-informed money on the planet is doubling down their acquisition of gold. And the people in this country, largely, if I had to, I don't know, kind of just paint a narrative, it would be that they are swept up in the euphoria after 4 years of living in a world that no one really recognized. And I understand it from a basic level. I get it. But I think it's a big mistake, and it's setting people up in disaster. I mean, we can just simply say there are three groups right now, three pools where the majority of the money is. One, money markets, over $7 trillion, which typically is associated with a recession, on top of all of the recession triggers that we've seen, the Somme rule and the uninversion of the yield curve and all of these things.
Now, let's zoom out and look at the bigger picture. How geopolitical tensions and the weakening U.S. dollar are laying the groundwork for a massive surge in silver prices. First, the geopolitical landscape is more unstable than ever. Trade wars, rising inflation, and mounting global debt have created an environment of fear and uncertainty. In the United States, policy decisions, like tariff threats against countries like China, Mexico, and the BRICS nations, are fueling global economic tensions. These conflicts don't just disrupt trade. They also undermine faith in fiat currencies, particularly the U.S. dollar. The dollar's dominance is slipping, and de-dollarization is no longer a buzzword. It's a trend. Countries like Russia and China are actively moving away from the dollar, increasing their reserves of gold and, indirectly, silver. This shift is driven by years of over-reliance on the dollar, coupled with sanctions and geopolitical instability. For example, when the U.S. froze Russian assets in 2022, it sent shockwaves through nations that rely on dollar-based trade, pushing them toward more tangible assets. And here's where silver comes in. Silver, like gold, is seen as a hedge against currency devaluation. But because it's cheaper and has growing industrial demand, it's often viewed as a more accessible option for both institutional and retail investors. As confidence in fiat currencies wanes, silver's appeal as a store of value grows. Now, combine this with the ongoing geopolitical unrest. Conflicts in Ukraine, tensions in the Middle East, and instability in regions like South Korea and Europe are adding fuel to the fire. Historically, periods of geopolitical chaos have driven investors toward safe haven assets like silver and gold. For instance, during the Gulf War in the early 1990s, both metals saw sharp price increases as investors sought stability. The U.S. government's fiscal policy is another key driver. Massive budget deficits and record-breaking national debt are pushing the dollar to its limits. Rising interest payments and inflation are creating an environment where devaluing the dollar becomes a tempting solution. For investors, this translates to increased risks in holding cash or dollar-denominated assets, and a stronger case for turning to silver. So here's the question. What happens when the dollar weakens further and global tensions escalate? The answer is clear. Silver, with its dual role as an investment and industrial metal, stands to benefit immensely. And we're already seeing institutional investors quietly shifting their strategies in preparation for what's to come. But this isn't just about what's happening now. It's also about where silver is headed. Let's take a closer look at the bold predictions from experts who believe silver is set to break past $38, and why their insights are more relevant than ever. So what does this all mean for you? It's simple. When one of the world's largest economies becomes increasingly dependent on silver, both as an industrial necessity and as a hedge against global uncertainty, the stage is set for significant price movements. And with China's impact on silver's supply and demand dynamics, any market instability could send prices soaring. But China isn't the only factor driving silver's appeal. Let's talk about the bigger picture, geopolitical tensions, and the weakening U.S. dollar, and how they're creating the perfect storm for silver's rise.
Yeah, and also the people who have the fiduciary duty to run their investments, they seem to be in the dark about interest rates and how important interest rates are, and the rising yields that we've seen. When the Fed cut rates on September 18th, the 10-year yield was at 3.6. We're now, around 4.8, I think, the last time I saw. So like Andy said, that's going to affect everything, cash flows. And the other thing it's going to affect is the government debt. Government is going to have to issue even more debt to cover all the expenses. That's going to affect the value of the currency. And it's just a huge problem. And the other thing as well, Donegan, is that for 40 years, the bond bull market and declining yields, we always had lower highs and lower lows. That's reversed. And we got so much debt that was created because of that. And now with the rising yields, the risks increase because rising yields and a lot of debt is a recipe for a lot of crises and disasters.
It's also the recipe for a reset.
Yeah.
Reset the system because it's so indebted, and as rates rise, the ability to maintain that debt becomes much, much, much harder. And that's the point. Since 1982, rates have fallen at a 45-degree angle. Everyone thinks that that's just part of the way things go. Falling rates make asset prices higher, and it's moving in the other direction. And the issue is that it's so many businesses and people in general who are trying to calculate their risk and their ability to maintain and service their debt, expect interest rates to continue to fall, but they're going in the other direction. And that would be the catalyst really to blow up the system. And you put that in context with the way the cycle, the psyche of the investor. Last week, Tuesday, was the record. Tuesday was the record trading day in the United States, all-time record for stocks trading under $1. Those are penny stocks. That is associated with speculative mania. And when you put that together with the Trump euphoria, with everyone thinks that everything is just going to get better, and in some degrees, in some respects, it will. But to ignore the financial implications of where we are, how we got here and how we get out of here, and what that looks like, writing that off to this exuberance is going to be, in my mind, a massive mistake. And this is the kind of thing that can very quickly change the narrative. And not to mention, I don't know how many people think that if he really is President Trump fighting the deep state, are they just going to lie down and let this go? Or do they attempt to make things very challenging for him within an economy that is so fragile. It just takes but a flick maybe to cascade things down the hill. And I don't want to go into this realm of conspiracy, but for people to think that this will just be smooth sailing, I think is.
Let's talk numbers, because when it comes to silver, the predictions are nothing short of astonishing. Experts across the board are bullish, and for good reason. Take Ole Hansen, the head of commodity strategy at Saxo Bank, for instance, is forecasting silver to hit $38 per ounce by the end of 2025. That's a 30% increase from its current levels. What's driving this optimism? It's a mix of safe haven demand, industrial growth, and supply constraints that's creating a perfect storm for silver's rise. One of the biggest catalysts is the global push toward green energy. Silver is critical for photovoltaic cells and solar panels, and with governments worldwide ramping up renewable energy projects, industrial demand for silver is surging. The International Energy Agency estimates that solar installations will grow by 20% annually over the next 2 years, and silver is at the heart of that boom. But it's not just about industry. Remember, silver also acts as a hedge against economic instability. In uncertain times like these, institutional investors are quietly increasing their silver holdings. Central banks may focus on gold, but silver often follows gold's movements closely, and historically, it outperforms gold during bullish cycles. And let's not forget silver's historical price spikes. During the 1970s, a time of high inflation and geopolitical unrest, silver hit what would be nearly $150 per ounce in today's dollars. Similarly, after the 2008 financial crisis, silver skyrocketed by over 400% in just a few years. These past trends are proof that when conditions align, silver can deliver massive gains. Right now, silver is trading just above $30 per ounce, but key technical levels indicate that it's gearing up for a breakout. Analysts are watching closely as silver flirts with resistance points at $31.80 and $32.33. A break above these levels could pave the way for a rally toward $38 or even higher. So what's holding it back? For now, it's short-term factors like dollar strength and market volatility. But these are temporary hurdles in what appears to be a long-term bullish trend. Here's the bottom line. Silver isn't just a bet on uncertainty. It's an opportunity. With experts pointing to significant upside potential, the question isn't whether silver will rise, but how high it will go. And as we dive into the current market dynamics, you'll see why this might be the moment to get ahead of the curve.
Divide and rule. So if we all like at each other's neck with illegal immigrants and we're feeling that our culture is being destroyed, people will get angry and they might rise up, and that will give them an excuse to crack down even more. So it's a really difficult situation, and that's why I always tell people that, yes, keep an eye on these things and they will affect you and your family greatly, but try to not let it get you down and try to look after yourself. And that's one of the reasons why I tell people about gold and silver, because it's something that it's not going to protect you in all aspects of life, but financially it will keep you relatively safe. And if you have financial safety, you can try to fight what's going on.
Yeah, if these people in positions of power can actually say something as ludicrous as that, well, if they win, we'll decertify the election. What does that say for the mountain that Trump has to climb? And these people are not just Eurocentric. This is a group that is the whole Western-centric. And that's why I think that 2025 to me will probably be a more eventful year than any of us think. Probably more eventful than things that we saw over the last several years, which no one would have ever thought anything like that could happen. I think that's kind of, to me, the prevailing environment, Dunnigan, is that people are not prepared. They think the worst is behind us. And so, the rain is gone, so they shed their umbrella and their rain jacket, and they don't see what's the possibility of it happening again. And I think that, to me, is is the scary part, is that people are now probably doubling down on the risk on trade and not looking at any potential black swans because Trump is here. And I think that is a fatal flaw, perhaps, of the way people are thinking.
Let's dive into what's happening right now in the silver market, because the data and trends are painting a very compelling picture for where silver is headed. Currently, silver is trading around $30.80 per ounce, and it's been steadily gaining ground for 3 consecutive sessions. Analysts are watching key resistance levels closely, specifically $31.80 and $32.33. If silver can break above these levels, we could see a significant rally toward its 2-month high of $32.28 and beyond. But here's where it gets even more interesting. The short-term momentum in silver is exceptionally strong. Technical indicators like the 9-day and 14-day exponential moving averages, EMAs, are showing bullish sentiment, with silver prices staying comfortably above both. Even the Relative Strength Index, RSI, is holding above 50, signaling that buyers are firmly in control. Now let's talk about the bigger players. Institutional investors are quietly but steadily accumulating silver. Over the past few months, we've seen massive deliveries of silver off major exchanges like the COMEX. In December alone, 4 to 6 million ounces were delivered, a staggering amount that highlights the growing demand among big money investors. Meanwhile, retail demand, while currently subdued, tends to spike during moments of crisis. If the financial instability we've discussed earlier becomes more visible to the public, retail investors could flood into the silver market, driving premiums higher and causing supply shortages. And that's not a hypothetical scenario. It's exactly what happened in early 2024 when the collapse of Silicon Valley Bank and Signature Bank sent shockwaves through the financial system. And let's not forget silver's unique supply-demand dynamics. On the supply side, silver is facing significant constraints. Mining output has struggled to keep up with growing industrial and investment demand, creating a persistent supply deficit. This imbalance is only magnified by the growing use of silver in clean energy technologies like solar panels and electric vehicles. On the demand side, silver's dual role as an industrial and investment metal makes it particularly attractive in volatile markets. Industrial demand is rising due to technological advancements, while safe haven demand is increasing as investors seek protection from economic instability. This combination is creating a squeeze that could send prices soaring. But here's the kicker. While the current trends are bullish, silver is still undervalued compared to its historical performance and potential. At around $30 an ounce, silver offers an accessible entry point for investors looking to capitalize on its upside potential. So, with the market setting the stage for a breakout, the question becomes, are you prepared to take advantage of this opportunity? Let's move forward to examine how silver compares to its more famous counterpart, gold, and why some experts believe silver might outperform it in the months ahead.
Yeah, I mean, it's not just in Europe, like you said, it's also in the US, the whole Western world. And I think it's by design, by the same people who are behind like the climate agenda. And I think the reason they're doing it, and I say this being like born in Brazil and having studied here in the States and living in the UK. I mean, I've moved around, but the kind of immigration they've had, and especially in the last few years, allowing illegals to come in and financing them, it's just the resentment is starting to grow against these people, and I can understand why they want to come to Europe or the US, because their countries have been kind of also destabilized, it all seems to be culminating. I've always spoken about the symptoms of a dying currency. It's not just economic, but also culturally and societal. And I think the people behind this, like let's say the Open Society, George Soros and others, their goal is to destroy nations so that they can have like a one world system, which is easier to control. But there's a lot of backlash now. And we saw in Romania recently, they had elections there, and this candidate who wanted to reverse these policies, he won, and they canceled the election. And now we're going to have elections in Germany, I think February 23rd. And I think Breton, he's like a French politician who was a commissioner in the EU. He said, if the AfD, alternative for Germany, if they win, we're going to cancel that election. I mean, it's
How do they even say that?
I know. It's just pretty outlandish. So, yeah. And the other thing, and then again, it's the old concept.
When we talk about safe haven assets, gold often steals the spotlight. After all, it's been the go-to hedge against inflation, currency devaluation, and economic crises for centuries. But here's a question worth asking. Could silver actually have outperformed gold in today's environment? Let's start with the similarities. Both gold and silver are considered safe haven assets, prized for their ability to retain value during times of economic instability. Central banks hoard gold as part of their reserves, and institutional investors look to both metals as a hedge against risk. In fact, the prices often move in tandem. When gold rallies, silver typically follows, but with one key difference: silver tends to rise faster. Historically, silver has outperformed gold in bull markets. For example, during the 1970s inflation crisis, gold rose by about 400%, but silver outshone it, surging over 1,000%. Similarly, after the 2008 financial crash, gold climbed approximately 170%, while silver skyrocketed more than 400%. Why does this happen? It all comes down to market dynamics. Silver is more volatile than gold, meaning its price swings are often larger. While this can be a double-edged sword, it also means that silver has greater upside potential in a bull market. Additionally, silver's lower price point makes it more accessible to retail investors who tend to flood the market during times of crisis. Now, let's talk about the gold to silver ratio. This is a key metric that investors use to assess the relative value of the two metals. Historically, the ratio has averaged around 60 to 1, meaning it takes 60 ounces of silver to buy 1 ounce of gold. Right now, the ratio is hovering around 75 to 1, which many experts believe indicates that silver is undervalued relative to gold. As the ratio normalizes, silver prices could see significant gains, but silver's appeal doesn't stop at investment. Unlike gold, silver has a dual role as both a financial hedge and an industrial metal. This gives it a unique advantage in today's market. For instance, while gold is primarily driven by macroeconomic factors, silver also benefits from industrial demand, particularly in rapidly growing sectors like renewable energy and electronics. So what does this mean for you as an investor? It's simple. While gold remains a cornerstone of any portfolio, silver's potential to outperform in a bull market makes it an attractive addition. With the gold-to-silver ratio favoring silver and industrial demand on the rise, this could be the moment to diversify and capitalize on silver's unique advantages. But before you make your move, let's take a moment to address potential risks. What could go wrong for silver? And is the upside worth it? Let's explore those possibilities in the next segment.
I guess that remains to be seen. But yeah, I think that the people are missing entirely. It's funny because at the same time, all of the people are missing, the most well-informed traders in the world are doubling down. This is the one thing that I think kind of slaps me in the face. And I'll be one of the only people saying this over and over. But yeah, but you own a gold company. I don't care. I mean, the truth of it is, that is what's happening. Biggest money in the world doubling down on gold, not on cryptocurrency, not on money markets, and not on the Magnificent Seven. At the same time, that's exactly where the people in this country are, thinking that rates could never go higher, things can never get worse, we can never see a bank or insurance company failure until we do. Your thoughts?
Yeah, I would add that I wouldn't I don't have to add anything about demand for bullion, but it feels like the sentiment for gold and silver is still low, really low. It is, despite the fact that we had a great year last year. Gold was up like 27%, silver about 21, and
That's not high enough anymore in this instant gratification.
I've noticed that, like in China, though, the public is the demand for gold and silver is huge. So I also feel that they're a bit more savvy about what's going on, and even the Chinese government, the communist government, is encouraging its people to buy gold, and so I think when the stock market turns, especially the Nasdaq, and I think they will turn, and also cryptos, we could see people ask themselves, where could we go? And they're going to look at gold and silver and the miners as well, and see how undervalued they are. So yeah, in a way, I think that's we're still. Yeah, there's no exuberance in the precious metals market.
We've talked a lot about why silver's future looks so bright, but let's step back for a moment and address the other side of the coin. What could go wrong? After all, no investment is without risk, and understanding the potential pitfalls is just as important as recognizing the opportunities. One of the biggest risks to silver's bullish outlook is a stronger than expected U.S. dollar. As a safe haven currency, the dollar often moves inversely to precious metals like silver. If the Federal Reserve adopts a more hawkish stance, raising interest rates further or delaying cuts, it could strengthen the dollar and put downward pressure on silver prices. Another potential hurdle is market volatility. If the global economy stabilizes unexpectedly or geopolitical tensions ease, the urgency to seek safe haven assets like silver could diminish. This is especially true for retail investors, who often jump into silver during times of crisis, but may sell off quickly if optimism returns to the markets. Then there's the industrial side of the equation. While silver's role in renewable energy and electronics is a major driver of demand, it's also a double-edged sword. If global economic growth slows significantly, especially in major silver-consuming countries like China, industrial demand could take a hit, weighing on prices. Supply dynamics also pose a potential risk. While silver is currently in a supply deficit, with mining output failing to meet demand, a sudden increase in production could temper price gains. For example, new mining projects or advances in recycling technologies could bring more silver into the market, easing the current tightness. And finally, investor sentiment. Let's not forget that silver is a highly speculative asset. Its price swings can be extreme, and if market sentiment turns negative, it could lead to sharp sell-offs. This volatility is something every investor needs to be prepared for. But here's the key takeaway. While these risks are real, they don't erase silver's long-term potential. In fact, many of them are tied to short-term fluctuations rather than the bigger picture. History has shown that silver tends to thrive in uncertain times, and the current economic and geopolitical landscape still heavily favors its rise. So, is the upside worth the risk? For many investors, the answer is a resounding yes, but as always, it's crucial to do your own research, stay informed, and diversify your portfolio to balance risk and reward. Now, with all these factors in mind, it's time to bring everything together. In the next and final step, we'll reveal exactly why silver could hit $38 and why it might just be the head duty against a crumbling financial system.
Today, we get in our vault a very, very, very large shipment of pre-1933 coins that we bought. I can't even believe that we bought what we bought. I'll put it to you that way. I don't know if I've ever overcommitted myself the way that I did on this one. And I think it will be the best special that we've ever offered, ever in the history of my company. That's a big statement next week. So for this week, it is the same. Whatever you're buying right now, things are on sale, period.
So after everything we've explored, from the systemic risks in banks and insurance companies to silver's dual role as both a safe haven and industrial metal, and even the influence of global powers like China, it's clear that silver isn't just an investment. It's a lifeline in an unstable financial world. Let's break this down. The fragility of the global financial system has never been more apparent. Banks are sitting on toxic assets. Insurance companies are overexposed to rising interest rates and catastrophic claims, and governments are juggling ballooning debt and geopolitical tensions. All of this is creating the perfect storm for silver to shine. History supports this. In times of economic turmoil, silver doesn't just hold its value, it surges. Think back to the 1970s or the 2008 financial crisis, when silver outpaced nearly every other asset. Experts like Ole Hansen are forecasting silver to hit $38 or more in the near term, driven by the convergence of safe haven demand, a supply deficit, and booming industrial use. But it's not just about the numbers. It's about what those numbers represent. When you invest in silver, you're not just hedging against inflation or a weak dollar. You're positioning yourself against the collapse of a financial system that many experts believe is no longer sustainable. Yet here's the reality. Time is of the essence. As institutional investors quietly accumulate silver and the gold to silver ratio signals undervaluation, the window of opportunity is closing. Retail investors tend to react late, usually after the prices have already surged. Don't be one of them. The question is, are you ready to take control of your financial future? With silver poised for what could be its biggest breakout yet, the time to act is now. Whether you're looking to hedge against uncertainty or ride the wave of industrial growth, silver offers an unparalleled opportunity to protect and grow your wealth. And before we wrap up, remember, this isn't financial advice. Always do your research and consult with a trusted financial advisor. But if history is any guide, ignoring silver in times like these might just be the riskiest move of all. So, what do you think? Is silver the answer to navigating the stormy waters ahead? Let us know in the comments below. And don't forget to subscribe for more insights on how to protect and grow your wealth in these uncertain times.